Hello, hello. So, this is our final chapter. I hope you guys enjoyed. And here we go. So, this one's called The Long Game, which is why this is so important with trading is playing the long game. Learning takes time. Going with the beginnings of all of it, going with paper trading, doing something in those, never giving up and being a little bit insane over time is a great thing. Progress is not built by perfect days, it's built by not quitting on imperfect ones. You can be completely correct about everything, and then there's a crazy fake out or something like that. Maybe your strategy somehow didn't work. Your A plus strategy fails once or twice or three times in a row. Some other things happen here and there. You get into a trade too late, even though you were waiting for it the entire time, and now it's still just take off. All these little problems. Consistency beats intensity, survival enables growth, and patience compounds. Being smart about everything is one of the biggest things one can do because it just takes time. Everything takes time. And sometimes you have one huge day, just like the idea of trading in a certain way is very funny because you just have to use it as a scalable object. Because in the short term pursuit, you make a little bit of money here and there. It can be in the long term also a great, great job. And then you just have some days that are crazy. And the statistics of like missing out on a few days of the financial market by getting out of the market is when you miss some of the biggest days. And if you miss those biggest days, your percentage returns would be so diminished compared to being in the market at all times. But what we're trying to do is timing the market. So that on the huge days, it's a mosquito, okay? You are actually more likely to hit those crazy days that can propel your entire trading force so much farther, like hitting 140k day on CPI or 400k day in 1 month. If you hit a 400k day, you literally don't have to work for the rest of the year. You can go and do whatever you wanted. You can start another business. You could do just buy a house almost 400k in theory if you get to take all of it out. And then you do the rest of taxes correctly, which I wouldn't know. You could almost buy a house like that. If it's not in the United States, for sure could. And those are some of the really insane things that one can do. Trading is not a short term pursuit. Expect periods of stagnation, expect drawdowns, expect self doubt. Progress is rarely linear. Those who persist succeed, those who quit never do. Same thing as also, though, you could lose 400k in a day, so always be careful and have your risk parameters correct. The reality of the journey. There'll be losing weeks, there will be flat months, there will be frustration, there will be temptation to deviate. Discipline will be tested, identity will be challenged. Growth happens here. What success actually looks like: fewer emotional swings, smaller mistakes, faster recovery, better decision making, increased patience, calm execution, long term consistency. The role of drawdown. Drawdowns are inevitable. Drawdowns reveal weaknesses. Drawdowns refine discipline. Survival is success. Recovery requires patience. Perspective prevents panic. Professionals endure. Trusting the process. Process replaces emotion. Rules provide stability. Structure removes guesswork. Data builds confidence. Discipline compounds. Patience protects. Trust is earned. Your edge over time. Small edges compound. Consistency multiplies results. Discipline reduces damages. Experience sharpens intuition. Mistakes decrease. Confidence stabilizes. Longevity wins. The identity shift. You are no longer chasing trades. You are executing a process. You think in probabilities. You manage risk professionally. You respect capital. You protect longevity. You are becoming consistent. The only goal: stay in the game, protect capital, follow rules, review honestly, improve deliberately, repeat relentlessly, let time work. When to step back. Fatigue clouds judgment. Emotion increases risk. When you're feeling tired, get off the market. At some point, you always have a next day to trade, even if it's the greatest opportunity of all times and you just know something's coming in the next 20, 30 minutes. Do what you need to do. Nobody's ever like stopped anyone from overworking. You think about Elon Musk said he worked 18 hours a freaking day in the Tesla factory until it worked, went bankrupt almost. So if you think this is one of those things, which you should because it's a business, it's not just a gameplay, then do it. Maybe even play GTA 6 in the November this year. You want to do that exact same thing. and start making money in those ways. So be smart about it. Stepping back preserves clarity, rest is strategic, patience is professional, survival comes first. Most important thing. A final reminder, no trade defies you, no week defies you, no drawdown defies you. Only behavior compounds, only discipline endures, only consistency wins. Time reveals truth. The link standard, oh, this is a business I'm working for or making with my friend for like some general trading indicators, other things similar in Lux Algo and TradeZella and those things with an AI that can help you trade. It's just a great one, and it's actually called Stellar Trail now. But that's kind of the stuff we believe there is logic over emotion, process over prediction, discipline over excitement, patience over urgency, longevity over intensity, consistency over perfection, and professionalism always. During drawdowns, after losses, before increasing size, when confidence fades, when temptation rises, when doubt appears, re anchor here. That's kind of the idea of when you go down these trades. Let's say you make a good amount of money. All of a sudden, you might want to actually revert back to the general standard of everything and retrade back into like one contract. If there's a few days that just don't go your way, why not go back to one contract, one mini, one micro, whatever your size is, like go for micro. Trade a little bit better, get those rewards back out, start playing with the risk again, realize, okay, my strategy clearly is based on this, 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 and this. So my A plus setup maybe needs more risk on those things than my C minus setup. C minus setup, you're putting in 10 contracts. A plus setup, you're putting in 10 contracts. Maybe if your C plus is that risk to reward high, let's say it's like a C minus, but you get 1 to 1, that would be weird. If it's 1 to like 50, then why not try it and 150 times it hits? With 10 contracts, you just gotta be really smart that you take it out on the opposite side when you build up all the rest of it on the opposite side. That's one of those things. You gotta stay patient with everything, stay professional, keep training to what it truly is, and here, let's see what we can do. So that was the great course. I hope you guys enjoyed it. Here, I will go now to my charts for a second. This would be some charts that we would have to offer in those ways, and I could explain it as much as I could. They just came out with a study though that would be you shouldn't actually trade or shouldn't actually take like 10 indicators or 11 indicators. You know, this one's kind of very important. So here we had something happen. Okay. Little pump upwards. Gotta break right down here. And you gotta kind of know what to do with everything. So here to here. Divergence. So that was kind of a solid low. Then we knew that this low is coming in, so we could get to and trade here. Then we have some other cool things on it. Honestly, it's almost better if I go into M and Q, so it's freer. M and Q, 38.4% chance it's going to go that way. 75% chance it was there. And all these things are made by Lux Algo, but to put the entire strategy together takes a little bit more than that. So right now, don't see anything too crazy I would just take, because this right now I can't just get into a trade right here. This could break upwards or downwards. I mean, this is very undecisive. Has to go through these wicks. This EMA right now doesn't make sense. We're kind of in a place where you wouldn't want to take a trade. You could take a risk if you really wanted to, but here, let's see if we have a different divergence. Okay, so now we see here in the 15-minute that this was actually the low of it, of this move at least. Then here, there. Okay, could have gone in for a small win. Into this order blocks, and on a 15 we see this would have made sense. So all these indicators help you really see everything clearly. It leaves you some kind of idea of what is going to be happening. RSI breaches this VWAP. This over this line. These two cross the VWAP. And then here we have golden pocket area to here with a lot of shorts back up here. So we could take a trade. In theory, we could take a trade where it reaches there. We could keep it simple. To midpoint there. Once those things align, we could take that trade. We have to wait until it reaches here. And then here, if you really looked at it, it also takes some skill over time to learn all this stuff. But it's not that bad of a job. So now, if we really wanted to, let's go with this one. Bing, bing, bong. Perfect. Okay, see what the problem is. So this way would take the trade if it's a safe trade with all those things aligned. That'd be A plus. Right now we're stuck right there. But yeah, kind of just gotta wait for a long game. Could take a quickie, but not really worth it. Delta volume makes sense. 70% 6/7. Yeah. Good old 6/7 now shows up out of nowhere. 70 is better right there though. This level down to here could happen. But yeah, so that's why I play the long game. Don't get eradicated by prop firms. Keep your capital alive. It's all about wealth management and actual truths. If you dump too much money into prop firms and rinse them, that's a good thing. But if you just rinse yourself over time without a good strategy, like that one quant guy, Simon JJ or JJ Simon, 15K in, you get 30K out a month, worth it. But if you somehow start rinsing too much money over time and are not getting your money back in, at some point it's time to like just be smart about it. Where I get a live account, work in those kind of ways, have a side job, everything kind of makes sense, and then make the dream of trading not too much of a pressure point where it's like there's so many other options. Going to community college, doing those things, going and trying to get your licenses for finances if you really are passionate about it, trading about or going for the series exam SIE you gotta get first. They can get sponsorships for series exams and series 63 and the series 7. Those things all very important. Just try your best in every single way, but if you're really devoted to becoming a full-time trader, I would say begin with paper trading a little bit. Buy maybe one $20 prop firm account from Apex. Once you feel a little bit more comfortable with the markets, structure out an entire plan on your Excel. Go with how much money could you get out if the entire contract states the way it's stated. After 6 times, how many money can you get out? What does the entire Excel look like? How much money do you have to put in to break even in those kind of ways? And what is kind of the entire concept about it? If you stick to their rules and those kind of things with Top Step or so as well, if you make $1,500, I guess, or I think it's up to 10,000, you can take out 5K. How can you truly make those things like a quant look correctly so you are in that money amount that you want to be in? And what is the long-term goal? what's going to happen a year from now. You have 20 days per month to trade, so over 200 days a year to trade. If you get those accounts done in 40 days from now, you still have 160 days to trade. If you have 100 days, let's say, with every single account, you keep them alive, how much could you theoretically make with your strategy and everything? Just start figuring it all out. And let's say you take the entire 200 days, stick even, break even plus that, to take it to 80 accounts of trading or 40 accounts. What happens then? How much money can you make in those months coming up? How much can you make in 1 year? Is there some kind of interest that changes over time? And all the other fun dilemmas that kind of come up over time. Because then if you have, let's say, 100K live account, 10 contracts per trade, risk management, not per trade, 2 contracts, 5 contracts, 10 contracts, and an A+ setup. 10 contracts give you $200 per point. Right now, let's just see it, breaker block. So interesting. So let's say it's 7.6 here. If you had a long to here, that'd be 10 points. That'd be $2,000 with 10 contracts. 1-to-1. Should we just do a quick one here? It's not a real trade, so let's just go for it. Why did it say 73 right there? Let's give it a second till we have a perfect entry. Our actual trade. So now we missed our entry. And we're hoping for the 88. Come on. It's a fair risk to reward. 3.25. Oh, little breaker block right here. Oof. This would be a quick loss. Honestly, we're still in profit, so I would put it now here. So let's say it's break even. Perfect. If this hits 0, we're done. That'd be $200 still. Wait, $200 per point would be at 1,000 right now. Could take out 5. Whoa. So here, if we close it, we close it, and I just delete it. It's not a true trade, it's just an idea. And let's just let it run. Right? Yeah, that's actually fine. If it breaches this position would actually be phenomenal. Wow. Good volume. Okay, I think we'll be okay here. Okay, interesting. There's a very good pattern. So yeah, that would be it pretty much. And yeah, just keep going. No matter what it is, take risks, try your best, and hopefully it all works out at the end of the day. That's kind of the biggest thing about it. If you trust in anyone, just should be yourself. That's why it's big trust trading. I hope you guys had a great time. And yeah, if you have any questions, leave it in the chat. Otherwise, wish you a wonderful time. Good luck with the trading. God bless you guys, and peace out.